What's going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I have 5 cheap, high-yield dividend stocks to buy right now. Since the market's down, these are stocks that you need to capitalize on. Some of them are new. Some of them are stocks that are a little bit down that have increased their dividends over time. So these are ones that you should capitalize on. They have increased their dividends over time, and they're very strong. And I got 2 bonus stocks for you as well. So hope you guys enjoy this. And if you are new, make sure you subscribe and hit the notification bell so you don't miss future videos. These are free to you. All I ask you to do is smash that like button, hit that subscription, and follow me. Hit that bell so you don't miss these videos. These are free to you guys as investors. So let's check these out right now. Now, again, I'm always hesitant with mortgage-backed REITs and, real estate investment trusts that have high dividend yields like this one. This one is sitting at $19.31. At one point, it was keeping up with the S&P. Its PE ratio is 7.14%. Its dividend yield is 9.74%. Its year range is 1479 to 2153. Let's see what these guys are about first before we start doing some digging and when you make a decision if you like this stock or not. So let's check this out. They're a specialty finance company that invests primarily in residential mortgage loans and mortgage-related assets. As a real estate investment trust, our objective is to provide attractive risk-adjusted returns to our shareholders over the long term, primarily through dividends and secondary through capital appreciation. Okay, how much money are they making? If I put any money in a mortgage-backed real estate investment trust, I need to see an increase in revenue or some improvement. So look at this. This is in millions of US dollars. 442, okay, 373, 421, 469, 526, 786, 740. Okay, in a pandemic, that is not bad at all. So we are starting to see something there's some promise. I see the operating income of expenses is a little bit on the negative side, but I'm not too worried about that because they're a mortgage-backed rate. And again, real estate investment trust, 90% of their earnings has to go back to us. What they make has to go back to us as investors. That's the rule of a real estate investment trust as well as a business development company. Let me show you their dividend history and why I added them on my M1 Finance dividend portfolio. They got a nice 47 cents right there. Now, they took a dive. Okay, big deal. 47. Pandemic hit. 25. 40. They're back to 47. Their dividend yield is 9.63%. PE ratio is 7.14. Annualized dividend of $1.88. I'm very careful with mortgage-backed rates. Of course, you know which one I'm going to be talking about next. This is one of my favorite real estate investment trusts. It's a mortgage-backed rate, Arbor Realty Trust, another one that has done very well. It's actually beaten the S&P at PE ratio 7.87. Dividend yield is 7.73%. If you got the dip, kudos to you when it hit 676. I mean, that's a deal. And it's just increasing its dividend. I'll show you its revenue just to show you that they can back up their mouth. And financially, they're doing phenomenal. Look at this. 2014, this is in millions of US dollars. 141, 142, 213, 346, 484, 535, 603. And they did well during a pandemic, so they're still generating revenue. The operating income of expenses is in the positive, so they know what they're doing. They're doing a phenomenal job. I own these guys. I'm long in them, and I'm going to show you their dividend history. You see 2015, 15 cents, 16, 18, 19, 21. Okay. It's at 30, 32, 33, 34. It's at 35 cents right now. A PE ratio is 7.05. An annual dividend is annual dividend 140. Dividend yield is 7.65. How can you say no to these guys? I am absolutely long in these guys, and this is why I like them. I mean, this is passive income. I'm basically getting a raise, okay? My employer during the pandemic, I am a registered nurse, by the way, did not give me a raise or did not contribute any money to match my 403B. So what did I do? Picked up a lot of shifts, threw it in my dividend portfolio to make up for that, and threw some money in my 403B. So this is one that I capitalized on the dip. I got a lot of these guys. If I can get to 100 shares, man, oh, man, that's going to be amazing. So I'm hoping to get to 100 shares with these guys in the future because they're not jumping up too fast, but they're increasing their dividend, which make them a phenomenal dividend stock. Let's jump to the next dividend stock. That stock is KeyBank. During the pandemic, these guys took a huge nosedive. They're at $19.80. They have a dividend yield of $3.73, a PE ratio 8.55. In the year range is 1133 to 2365. These guys have increased their revenue. So I did post previous videos on this. Banks always increase their revenue. I'd be really surprised if they didn't. And, you know, these guys have done, I think, about 4 or 5 videos on them. And these guys are less than $20. So how can you not say no to these guys? I own these guys in my E-Trade dividend portfolio. I'll show you their increasing dividends real quick. And this is what makes these guys an attractive dividend stock. 8 cents, 9 cents, 10 cents, 12 cents, 17, 18 cents. Eventually it'd be 19 or 20. So again, none of this is financial advice. It's for entertainment purposes. But you're seeing a bank stock that's $20, almost $20, with a 3.69% dividend yield, a PE ratio 8.64, an annualized dividend of 74 cents. Their revenue is increasing. They aren't jumping too fast. Okay, they were in line with the S&P. This is actually a decent stock. Same with the Arbor Realty Trust. You can actually have this in a traditional Roth IRA, and this one significantly goes up in the future. I mean, probably 20 years from now, I'm assuming there will probably be a stock split because their price will keep on going up. And they're just a very successful company. I have a cashback card with them. I am a customer with KeyBank, and they've been good to me since, you know, I created an account when I was a kid. So, you know, I'm going to be long on these guys. They do a great job, and we'll jump to the next dividend stock. So we have a financial services corporation in Pittsburgh, FNB. I'll show you real quick who they are on their website. But these guys have not done well against the S&P. They have a 4.32% dividend yield, a PE ratio of 10.54, and the year range was 637 to 1383. These guys are really attractive as a dividend stock. Now, I will show you that their dividend hasn't increased over time, but my gosh, it's $11.11 with a 4.32% dividend yield. You got to check these guys out. Let's check out their website first. So they're a diversified financial services company that's publicly traded in the NYSE under the ticker symbol FNB. Their team of professionals are dedicated to providing quality personal service to individuals and businesses to help them reach their financial goals. So these guys are pretty big, okay? They offer a full range of commercial banking, consumer banking, and wealth management solutions. Remember, I always say this, take it to the bank. Banks usually increase their dividends, but I'm going to show you a little bit into these guys before you make a call because they are cheap and their dividends pretty nice. But let's check and see how they're doing financially because I have never done a review on these guys. So the nice thing about these guys is they're slowly increasing. So this is in millions of US dollars. 667, 709, 880. They're in the thousands. 1232, 1446, 1541. Took a little bit of a dive. 1424. But everything looks like it's in the upswing. And these guys are just, banks. I mean, you use your credit card, you use loans. I mean, these guys are generating money all the time. I mean, cashback cards, it doesn't matter. These guys are the real deal, and I'm going to show you their dividend history and what makes them very attractive. So they're just 12 cents, but they have a dividend yield of 4.23%, PE ratio of 1052. Now, it's not going to jump up like crazy, okay, with its compounded annual growth rate and dividend, but just keep an eye on this one. If you're interested, go for it. I mean, again, none of this is financial advice for entertainment purposes, but a 4.23% dividend yield, a company that's increasing its revenue, there's potential for it to increase its dividend over time. So that's another one that's very attractive. Let's jump to the next dividend stock. Another one is Regions Financial. This one's with a dividend yield of 3.49%. I have done videos with these guys. Their revenue has increased, and look at them. They were just in line with the S&P. They took a little bit of a dive. They're jumping up and down. They're a very strong company. They're a big company too. Their volume is 6.58 million. The year range is 1060 to 2381. It's less than $20. Revenue is going up, which I showed you guys in previous videos. And the other thing is their dividend has significantly gone up over time as well, which I'll show you. So if you want a raise, this one will give you a raise. If your employer is not giving you a raise, check this out. 3 cents, 5 cents, 6 cents, 7 cents. 15.5 or 0.155, dividend yield 3.15%, PE ratio 7.71, annual dividend of 62 cents. You got yourself a high yield dividend stock. Now, a lot of people argue, well, what's a high yield? Usually, most people say a high yield dividend stock is usually 3% above. Now, I try to get mine within like 3 to 7% range. And once it starts getting higher, you got to be careful with the yield trap. But you have to understand covered call ETFs like qyld, you're going to get a nice return on it. And I was just in a video chat group with Hidden Freedom Investing, and he's somewhat right. I mean, is it really a like ETF? I mean, it's basically you're doing covered calls. I mean, is it really, I thought that was very interesting the way he explained qyld. And, I thought, wow, I didn't even think about it that way. So make sure you check that guy's channel out as well. He's about to retire probably in a year and live off of passive income, which is nice. So here's the thing, okay? You're getting a raise with this one, okay? These banks are getting raises. And I'm going to show you my 2 bonus stocks right now. One of them's above $20, but it's a good bank stock. And another one is another bank stock, which I always emphasize all the time. That is Bank of NT Butterfield and Son Ltd. It has a dividend yield of 5.42%, PE ratio of 10.55. Its year range was 21.50 to 41.36. It is less than $40 than it hit. And I'm going to also show you how much revenue they're generating, because you need to know what you're getting yourself into and why is it a 5.42% versus 3%. So let's see how these guys are doing revenue wise. You have 418, 397, 424, 468, 537, 591, 537. So it's slowly going up over time. They're doing something right, as these guys are, as a bank, you have to be like careless and like foolish to lose money. And these guys are not losing money, they're gaining money. And I'm going to show you their dividend history. So 2017 it was 32 cents, 2018 38, 2019 44 cents, 2020 it's at 44 cents. Eventually that's going to go up. I mean, you can play the pandemic card. Their revenue is starting to go up. They're starting to get bigger. I see these guys increasing their dividends over time. It's a good deal, honestly. That's one that I'm looking at when I create my financial section on M1 Finance. So one's definitely on my radar. I would consider it, anything less than $40, that's a bank stock. That's very attractive, increases its dividend over time. Its revenue is going up, and it's not jumping up too fast. I absolutely love that. We're going to jump to the final dividend stock. That is Huntington Bank shares. I own this one and I'm long in it. 3.93% dividend yield. It is right now in the year range 852 to 1691. PE ratio 15.79. It has not jumped up like crazy against the S&P, which makes this very attractive as a dividend stock. And I've showed you before in previous videos its revenue has increased. So let's check out its dividend history. And it's almost like you're getting a raise. It works. So I love it. Check this out. Again, I have a long-term goal to make $2,000 to $4,000 a month in my quarterly dividends and $1,000 to $3,000 a month in my monthly dividends. And these guys will help me obtain that $2,000 to $4,000 a month in my quarterly dividends. Look, 1 cent, 4 cents, 5 cents, 6 cents, 7 cents, 8 cents, 11 cents, 14, 15. PE ratio of 1077, 3.93% dividend yield, annual dividend of 60 cents. What do you think I'm going to do after next summer when I decide to be a travel nurse? Travel nurses, they make a lot of money. And I'm going to be throwing a lot of money into my dividend portfolio, as well as being 100% debt-free in NP school. Crazy thing is, I might just be a travel nurse with all the money that they're throwing at nurses right now. So let me know what you think of this video. If you are new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. This is Darth Dividend. You guys have a good one. And I will probably post a video on Friday regarding my Fundrise portfolio. There's been a little bit of a demand for a Fundrise Friday. So after my shift, I can probably do a quick Fundrise video. I do have a big exam next week, so I'm going to try to post some videos for a few days and go from there. So you guys take care and have a good one.